Hey traders, Nick here, following up on that IBM write-up I did. This is for educational purposes. I was asked if it was time to do a 145, 140 credit put spread. That's a bullish trade, saying that IBM will not fall from 160-ish down to 140 between now and mid-April. On the chart, if you go to, I wrote up, you saw what I wrote up about it, and here are the zones I was talking about. You know, here there was nothing in between those two zones. So if it loses this zone, then it's quickly going down to this zone right here. So it's market dependent. Today the markets are slightly red, but what if the markets continue on down? So here it is on the 1 year. I zoomed in. This was a low. He's saying, the member is saying that it had two bounces, solid bounces, establishing a floor. But sometimes the bounces will crack the floor and they end up being a trapdoor to further downside. So here's how I look at it. This was event-driven. Earnings, boom, down. This was also headline-driven, something, I forget what it was, boom, down to here. So then between these two periods of time, there was a risk that Buffett, its biggest supporter or most outspoken or most notable supporter, there was a danger of him coming out and saying, I've given up on it, to heck with them, they keep disappointing me, I'm out. Then they would have caused a debacle in our stock. However, I think somewhere around here, recently at least, he came out and said that he wasn't leaving, and in fact, he may have added to his position. So, hence the rise. Consistent buying, people backing back into it, okay? So then, recently, we just headed downwards, disappointed by whatever they had to say on their analyst day, whatever they had event recently. So what now? Now it's pinpoint. Look at it. We got this orange line, this orange line. This is a rough orange line that doesn't apply to any technicals, but I like to keep it. This line that broke, this line has some more downside for a perfect target downside, but it's never perfect. However, now the range has gone from this to this to this to this to only like this area. So a lot of energy. It's going to break out or down, and it's almost a coin flip. But with markets being at all-time highs, that just adds to the chances of being down, because if markets break down, this thing has no reason to be up here all by itself. So is it time to go long it? I say, why not wait? I personally am not compelled to do so. If somebody wants to catch that falling knife with a finite amount of money, they can do a debit call spread out in time, say April or May. And if you're correct about it, then you stand to double your money. And if you're wrong, you lose your premium. But you still have time to close your premium, so you lose part of your premium and not all your premium. So if you allocate $200-300 to it, you stand to double your money. That's a 50%. You know, double your money in just a couple of weeks, 2-3 weeks. That's pretty darn good, even though it's not unlimited profit. But at least you profited something with it, right? Instead of saying shoulda, coulda, woulda. So that's how I look on something. So they said, is there a way you can tell if the double bounces are solid support for being a floorboard, so you springboard up, or a potential trapdoor? There usually isn't. Each case is separate. Each case has to be looked at differently. There's fundamentals behind this one. I really don't believe in the company the way I used to. I don't have the same faith in the management the way I used to. They speak in general terms. They're holding hands with other people, trying to pick up scraps and holding on to coattail. I've yet to see anything from them. They have advertising on TV with Watson and whatever. Show me how that's going to bring in money, whether from corporate money or from people money, retail money. I still am unclear on the whole picture, so I'm not in a rush to jump in or out of it. Nick signing out.